Welcome back, Adam here, and today I'm looking at the upcoming changes to self-assessment caused by the Making Tax Digital for Income Tax campaign, which is HMRC's attempt to modernise the tax system and is due to start rolling out on a large scale to millions of taxpayers in April 2026. So if you complete a self-assessment tax return, then today's video will be very relevant for you, as you are likely to be impacted by these changes at some point. Before we get into these changes, don't forget to like the video and subscribe to the channel for more helpful tax content. Now let's start with what Making Tax Digital actually is. Making Tax Digital, or MTD, is the UK government's initiative to digitalise the tax system, making it more suitable for the modern world. It's about using technology and software in particular in this case to make tax reporting more efficient, more accurate and more transparent. MTD also has a much wider scope than just self-assessment. We've already seen it introduced for VAT initially, where we now see all VAT registered businesses reporting under the MTD rules. It's being rolled out for income tax and it's likely to be applied to other taxes in the future. The general aim is that instead of keeping paper receipts and filling out paper forms, or even manually entering your tax details once a year on HMRC's government gateway, MTD will make things much simpler by using software to help you track your income and expenditure throughout the year, so that both HMRC and you, the taxpayer, have access to more relevant financial information. The use of compatible software will mean that your tax position can be calculated in real time rather than waiting until just before the filing deadline to know how much you owe. The goal of Making Tax Digital is twofold. Firstly, it's to improve efficiency and the accuracy of information submitted by the taxpayer. With digital records, there's a much lower chance of errors or delays, and the taxpayer should have much easier access to important financial information to aid their decision making. At the very least, the taxpayer will be able to monitor their tax liability throughout the tax year and plan accordingly. The second is that the government also wants to reduce the tax gap. That's the difference between the amount of tax owed and the amount actually being collected. By digitalising tax returns, it's easier for HMRC to monitor and ensure that all income is being reported correctly. HMRC estimated that in the 22-23 tax year, the tax gap resulted in around £8.5 billion of unpaid tax, which is around 12.6% of the total theoretical self-assessment liability. Okay, let's get into what MTD for income tax actually means for you. What will you have to do differently moving forwards if you are impacted? If you're someone who files a self-assessment tax return, then you'll know that up till now this has been done once a year, which for most taxpayers has meant doing little or no record keeping throughout the year. And as the 31st of January submission deadline approaches, joining that mad rush of people trying to pull together their income and expenditure figures to then be submitted to HMRC before the deadline. This is demonstrated by the fact that with around 12 million self-assessments being submitted each tax year, which can be submitted any time from the 6th of April through to the 31st of January the following year, around half of all submissions are made in the month of January, and around 800,000 of those are being made on the final day. Well, with MTD, this annual process is changing. Instead of filing just one tax return each year, you'll need to submit your income and your expenditure information every 3 months, and you'll need to do it through MTD compatible software. You'll also need to maintain digital financial records rather than paper-based, and there will be a final tax return at the end of the year to confirm your income details are correct, as well as wrap up any income that wasn't already covered by your quarterly submissions, which could be things like capital gains or employment income and anything else that needs reporting. So it's pretty clear. This isn't just a little tweak to the way we currently do things. This is a complete overhaul of the self-assessment process. Thankfully though, MTD for income tax isn't being rolled out all at once, and it won't apply to everyone, as it's only those with self-employed income and or property income who will be impacted initially. There are also income thresholds to meet which will gradually reduce over time, drawing more taxpayers into MTD. The first stage will be in April 2026 and will apply to anyone with qualifying income of more than £50,000 from self-employment and or property. HMRC estimates that this will impact 780,000 taxpayers. The second stage, which is estimated to impact a further 970,000 people, will be in April 2027, which will see the threshold reduced to anyone with qualifying income of more than £30,000 from those same two sources. There has also been a commitment to set a date for a £20,000 threshold by the end of the current government. I would also point out that when MTD was rolled out for VAT, it was also done in stages, but ultimately the aim was to get everyone filing under the digital system, so it wouldn't surprise me to see the scope widened in the future. Qualifying income is calculated as the total gross income from both self-employment and property added together. Gross income will be your turnover rather than your profit. In terms of what software you'll need to use, it will need to be MTD compatible, which means that it needs to be able to communicate with HMRC's systems in order to send them the quarterly updates. Our Go Simple Tax in-browser self-assessment software and our Coconut bookkeeping software will both offer taxpayers everything they need to be fully compliant, including the quarterly submissions and the requirement to maintain digital records. Now, if you're wondering what exactly you should be doing at this point, it's important to first establish whether this will impact you immediately. If you're below the threshold or your income is from a different source than self-employment or property, then for the moment there are no plans to change the way that you report that income to HMRC. That doesn't mean that you should forget about moving to digital records and software altogether, as you are likely to be impacted at some point in the future. It just means that you can take a bit more time to plan your transition to digital records. If you are impacted, then take note of when this change will apply to you, but aim to have transitioned to digital records by choosing a suitable software partner in advance of this date. That is all for today. Thank you for watching. See you next time.